Canada's annual inflation rate unexpectedly dropped to 1.9% year over year in November. This is the second time in 3 months it has dropped below the Bank of Canada's target. For more on this and what it might mean for rate cuts moving forward, let's bring in Pedro Antunes, chief economist at the Conference Board of Canada. Pedro, thanks for joining us today. How are you?
I'm good, thanks. Always a pleasure.
All right, so 1.9%, a little bit lighter than expected on inflation in November. The core rate, 2.6%. So based on these numbers, just a brief snapshot here, was the Bank of Canada justified in cutting by 50 basis points last week?
Yeah, I think in essence, we're seeing an economy that's quite weak to begin with. The bank keeps referring to excess supply in the economy, and I think they're really referring to the labor market there, unemployment rate now nearing the 7% mark. And of course, this number on inflation, which is very positive, it continues to be at the target for the bank. I know that core inflation is still running a little hotter, but I think certainly the numbers coming in for this month of November are good news for the central bankers, and certainly as we look ahead, we are seeing, you just talked about the weakness in the dollar, but the retail sales tax reductions will have an impact, at least temporarily, on lowering inflation in the next couple of months. So I think the Bank of Canada is breathing comfortably these days.
Right. We'll circle back to the sales tax holiday in just a moment. But in these numbers, Pedro, we saw travel costs come down, mortgage costs lower as well. What are some of the things that stood out for you?
Well, I mean, some of the certainly we're seeing weakness in the service sector, several service sector contributors. So prices there are down. Prices for clothing and footwear were also down. Actually, a decline in inflation, a decline in prices, if you'd like, in some of those components. When we look at things like food or shelter costs, those are still running pretty hot. They're just lower in the month of November than they have been. In other words, the inflation is lower than they have been in prior months, and that's good news. When you dissect what's happening with shelter costs, I think you have to look at essentially the impact that lower mortgage rates, the lower interest rates are having on the cost of holding a mortgage, but rent costs are still accelerating. So there's still a challenge there for a lot of households in Canada.
A challenge on the grocery side of things as well. The numbers are they're tough for a lot of families. Grocery costs up about 20% since 2021. Those continue to be sticky. What's your overall view there, and why these numbers continue to stay relatively high?
Yeah, no, I think we've seen, this was all related originally to supply chains and, input costs into agriculture. We had a couple of bad years for crops. And all of this has kind of stuck in the relative prices. I think inflation, we need to be careful around understanding that inflation is lower now, but that doesn't mean necessarily that food prices are coming down. And in fact, when you look at the latest numbers, food prices are still running at higher than 2%. For the most part. So there's still a challenge. And, when we talk about food, certainly the impact is most felt by lower income households who spent more of a proportion of their total income on food and, of course, shelter, as we just discussed. So still a challenge for a lot of households, I would agree. I don't know that we're ever going to see the price of food actually decline. We'll see some items possibly coming off of highs, but overall, we're just looking for food inflation to come into that 2% range as well.
Pedro, you touched on the GST/HST holiday, which started December 14th, runs for a couple of months. So what do you think inflation's going to look like the next few months in terms of the headline numbers? And grand scheme of things overall, will it just be a blip on the radar and temporary?
Well, it will be a blip because essentially we're thinking we'll take inflation down to about a 1.5% range, so taking about 0.5 percentage points off the numbers. But of course, then you see that rate come back, and that will add a 0.5 percentage point to the numbers once the holiday is over. So I do think it'll show up in the numbers in the next couple of months. It'll be a relief, but again, we need to be careful what happens going forward. The other piece that's really important is the fact that the dollar is continuing to slide. There's a lot of pressure and a lot of uncertainty with what's happening south of the border and a potential trade war. That will add pressure to the value of the Canadian dollar. And so when we look at the basket of goods that we consume and how many of those goods are imported, this is going to be a challenge as well on inflation going forward. So it's a temporary little piece of relief here. But some of these pressures are going to continue to affect households.
Lastly, here, Pedro, you mentioned you believe the Canadian economy relatively is fairly weak right now. We have this threat of a trade war. How do you see this playing out?
Well, nobody really knows, and I think it's going to be a really challenging year in terms of policy making, in terms of business planning, and certainly for us economists who are trying to forecast what's coming. The problem with these tariffs, I think for one, there's a lot of threats here that will scare investment, and so the objective, in fact, may be to bring investment to the U.S. to make investment less attractive in Canada because of that uncertainty that's created by these kinds of threats. If we in fact see a 25% tariff across the board, this would be a recessionary impact on Canada. There's no doubt. If it were to last, we would see industries like the auto sector essentially disappear. We couldn't survive in an environment where there's these kinds of tariffs. So I think for the most part, these are threats, these are bluffs to move investment and to create this kind of uncertain environment. But, we're hopeful that we're not going to see these policy actions effectively take place come January 20th.
Thanks for your time today, Pedro.